Hello and welcome to the Theory of Thing Investment Podcast. My name is James Wheeler, Managing Director of Barclay Pearce Capital's Wealth Management Team, and you are here live from Studio 83,006. It's 26th of the 7th, 2024. That's it, 26th already. I'm joined here by Heath Moss of HLM Investments, joining us from Adelaide from Studio 6.
Yeah, only 6 studios here in Adelaide.
Yeah. Mate, how are you going?
Very well, thanks,
I'm still getting used to this new format. Zoom doesn't have a 3, 2, 1 started. It's just you hit record, and then she's like recording in progress. So there's a delay. I don't know how to edit or get around that.
Yeah,
mate. Sorry.
Good. Very good, very good. The year's flying along, isn't it? We're almost in August. It'll be ASX reporting season soon. In fact, I think we might have a couple of companies next week already reporting. But yeah, good. Kids are back at school. It's been a bit of a nothing week, although it's been an everything week as well.
You think? Yeah.
Everything
all at once, mate. My week has been an absolute mess. Or not a mess. I mean, it's been an organised mess. Just in getting it done. I've because we had our London conference a few weeks ago that went really, really well. The Australian Investment Summit that. Now I've actually had parts of my team started to trickle back from various areas that they went, because you go over to London and some of them went to different places. One of them, Tessa, who's in our events team, she brought me back via Morocco a fez. Look at that.
Fantastic.
Hey, I'm not sure how you're supposed to wear it.
You remind me of the villain from I think Indiana Jones. He wore one. He wore a fez, I think.
Yeah. Thanks, mate. I was wondering if the Shriners would want to have me on into their fraternity. I think I could probably do that. Drive one of those little cars. I don't know if you wear it back. Do you wear it back on your head like that?
I have no idea, mate. Yeah.
Anyway, I'm sure this is fascinating listening for anyone who's hearing it through the podcast. Isn't watching a grown man trying to squeeze a fez into his head. Anyway, it is a good, beautiful part of culture. She also brought me back some oils, hand oils, hair oils, and stuff like that, which is really nice. It's good. I love when people do that. Just small things.
Yeah, fantastic.
Mate, the highlight of the week for us, I mean, the standard book talking that I do, we got $2 million, a $2 million raise done to list Wellnex over in London, and a dual listing that we're going to be doing over there. So
yeah, I saw that. Fantastic.
That's all done and funded. It was pretty good. And the biggest one, I've been sitting on this. No, actually, it was a rumor. We didn't know for sure, and so it wasn't any sort of material information on the whole thing, but main board. They announced that they were going into the main board.
Fantastic.
Great. I'm also amazed that was managed to be kept on the lowdown from my guys for so well, which is great. It shows that Chinese walls are in place, which means that a broking firm is working and everybody's happy, which is good. And then they've come out on main board and I'm just like, that is incredible. Yeah, so not on the AIM, which is good. So everyone's very happy. There's a lot of brokers over there. I would strongly recommend for any company that's out there who's finding valuations tough on the ASX, look at a dual listing to London. If you want to do that, please come and talk to the guy in the fez.
They're pushing it hard, aren't they? The LSE. Actually, the TSX are pushing it as well. The Canadian Toronto Exchange are pushing it hard as well for dual listings here in Australia.
Toronto's. I mean, it's difficult. That's a tough slog. It's a tough slog going to Toronto, mate. Mate, we've had something happen. We've had a few things happen this week.
Had a week.
I was set to go on Ausbiz. I went on Ausbiz yesterday, and here's a little bit of behind the scenes magic that happens as I think that I like to reveal what's behind the kimono or behind the curtain, whatever it is, and you got to send your notes like a day ahead of schedule for what it is you're talking about.
Yeah.
If you're going to go on Ausbiz, they like it 2 hours ahead, but they've had a few changes and they're just like send it a day ahead. So I sent it a day ahead. I had all these valuation sites. So this is on Wednesday. On 19 out of 20 metrics, the S&P 500 is expensive. Everything, and I could pull that up. In fact, I'll do that after, but I'll pull it up, just showing exactly how expensive it was, and it was showing about and even just on the PE multiple, just how expensive that was as well. Looking at all of the metrics except for one, even the weird stuff like what's some of the weird ones? So valuing the I've got it right here. Let me just yank it up for you. I'll pull that down. No, it's not going to work because you're going to be able to see people's email addresses.
Yeah, we don't want that.
I don't want that, right?
Chinese
anyway,
walls.
See it's on the trailing PE, trailing gap PE, forward consensus PE, normalized Schiller PE, price to book value, forward peg, trailing peg, and like I said, even on the weird ones, the S&P in gold terms, WTI terms, Russell 2000 terms, expensive over historical averages, although back to 1792, some of these averages go back. 1832 to present for the trailing GAAP PE. So that was expensive. And I put all these things up there just going, look, it might be time to just ease off a little bit. Definitely don't put any new money into it that's going on. And then Wednesday night happened. So Thursday I rock up to the studio thinking, well, I can't go in with that, can I? Because the market has already torn everyone a new one. And so I can't go in and say, well, this is what I was going to talk about. I was going to say you should stay out of the market. I was going to say the market's set for a pullback. Then you look like a complete. You look like a bit of an F-wit, I think, if you go.
You do
that sort of thing. So
you do.
Anyway, so we had to find something else to talk about, which is fun.
Yeah, the market swings and changes so much. I remember driving. I had everything set for an Ausbiz talk in mid-morning. So driving into the studio, Trump tweeted one thing, everything changed. Had to change everything we were talking about within the space of an hour. It was chaos. So it certainly keeps things entertaining, doesn't it?
It does. And as I said, it's just like welcome back to that thing again. Now Trump isn't a shoe-in, so this is where it is. I actually think a big part of the correction that we're seeing now in the market is because there's an uncertainty about who the next president is going to be.
100%. I think it's too coincidental that Harris gets the nomination. Well, I don't think it's official yet, but it looks like it's going to get the nomination. And odds have come in for her, blown out a little bit for Trump. And she's in a bit of a honeymoon period. She'll get a bit of a lift in polls, etc. Over the next couple of weeks because of it. Uncertainty. The market's gone from knowing, okay, Trump's going to be in power in a few months, etc., to now he's probably still going to be in power, but there's a risk he's not.
It's not a wave. His odds have definitely come down. And I think that the idea is that it's not a complete Republican sweep either. That's going to be the kicker. No. If she can at least hold it together so that they don't lose both houses of Congress and the presidency, then I think that'll be a win for the Democrats at this stage looking into it. And hell, she might now actually just jag the presidency because it's a two-person race.
Yep.
Her vice presidential pick might help them flip Pennsylvania. Anyway, show us your market wrap. What do you got for us?
Market wrap. All right, let's get stuck into it. Share my screen. Where's my screen? There we go. Share it.
Nice.
Beautiful. All right. Beautiful. Nice SPX, S&P 500 move there. Beautiful. So you can see the how we've peeled off over the week. That's not news. It's down about 2% for the week. Feels like a lot more.
I would have said 7 or 8%. Is it seriously only 2%?
Yeah, and we're only down 4.7% from the high up here. And that's just a little area I thought we would test where we consolidated a few weeks ago. And we're right on the trend line now. Last night, I think we had a 100-point swing last night, which was the largest in God knows how many days. And we've broken our streak this week of days without a 2% fall in the SPX. I think it was 357 trading days.
I've been saying 700. I've been saying 700 just to see if anyone picks me up on it. It's not. It's. I thought it was 452, but okay. Yeah. It was in 2022. I think is when it was. So.
Yeah, and actually, it's nowhere near the longest. I mean, the longest was 900 days, and that was before the GFC.
Yep, that was 2000, all that 2005 to 2008.
Yeah. It was remarkable. I didn't realize we went that long. I was fresh into the industry then. I started in 2004, so I was just a young pup then. But yeah, we can see the comeback there. If we look at the NDQ, the Nasdaq 100, it's a lot more severe. I think we're coming back to about that 18,400 mark on the NDQ. You can see that was previous highs back in, what are we looking there, March and April. Where there was a bit of consolidation and then a move higher. And it also coincides with the 200-day moving average. Whereas you look at the SPX, if we break down below this trend here, then we've got another 200 points to fall. So another 4% or so to fall. We should be a healthy, close enough to 10% correction, which I think has been on the cards for a while. We haven't had one this year. We average about 2 every year, 10% corrections.
Yeah.
So we're overdue. Like you said, every metric was saying it was overbought. You can see down here on the RSI how overbought it was, the most overbought since December 23.
Nice.
And we're coming back down to that oversold level. So,
Good.
like you said, coming off on the back of, I think, that presidential race, who's going to win that? A little bit of AI stuff unwinding. Google reported yesterday morning, I think it was, or was the morning before.
I lose
Just
track of the days.
not showing much in terms of earnings from AI. I mean, personally, I wasn't expecting anything, and not anything material for probably 3 to 5 years. But the market has used it as an excuse to sell off, apparently. But overall, they did beat on top and bottom lines. Google, Tesla was terrible. They beat on revenue, but missed on earnings by a long way, and then missed on free cash flow by a long way. So the market was turned about face on them. Apart from that, GDP last night. So also the markets have come off on the back of. I think the market's been concentrating more on the macro data and the risks of a recession and what the implications for earnings will be. Now, we had a lot of soft PMIs come over the last week and a half. However, last night Q2 GDP came through. Well, the preliminary one, very, very strong, up to 2.8% year on year. It was expected to be around 2%. So a big beat there. Consumer consumption was very, very strong. It had grown from Q1. So Q1 was very, very soft, whereas Q2 was actually quite strong. So that's sort of brought back. And we saw it last night, I think, with the market. So they're a little bit, we were in positive territory for a lot of the night and then obviously peeled off. But the market is sort of saying, okay, maybe US isn't going to recession again. And we're definitely not having rate cuts in August, despite what Dudley says. And September is still on the cards, but it could be that Goldilocks scenario still for the US.
We keep playing this game. We keep playing this back and forth, cut, no cut, market up, market jitters, good data, bad data. It's just this stupid dance that we happen. And it's just like there's no way out of it.
And the market will always sell first and ask questions later. I mean, that's the way it is.
Especially if you've got so many profits to bank and you're done. It's still technically the beginning of the financial year. Anyway, there was something else that was happening. Oh, yeah. So September is 100% priced in. Yes. September cut.
Yes.
Is 100% priced in.
Yep.
I wish that was the case over here.
Yeah. And I've just got the 10-year yield on the screen there. We've seen a bit of a rally in yields over the last week or so. Did peel off last night a little bit. Not much to talk about there. US dollar, again, mirroring those yield moves. If we look locally, let's go to the XJO.
Oh yeah, I get asked about this a lot. We got to start making more stuff about the Australian market.
Yeah,
so we will do our best. Okay, Heath is the local guy. I'm the overseas guy.
We can see here our market has peeled off with the US. We have outperformed though. We were only down, I think, 1.3% this week versus the US's 2%. And we're only, I think, 2.5% or something off our highs versus the US, almost 5%. So we're outperforming here. That's a bit of a value play, I think, and that we're dominated by financials and minerals.
Speaking of the minerals,
but if we want to go to minerals, and I'll quickly jump to copper.
Copper has just, I mean, that's one miraculous green bar in a very, very bad run. The plenum. The plenum was everyone. There was a lot of hopes being rested, and myself included, that there was going to be some sort of thing out of there saying that we're going to be doing this. Nothing at all.
Nothing. Although they have started tinkering around with some of their rates over the last few days, short and longer term. So maybe they're basically their target is still 5%. And they're tracking below that, so they'll need to stimulate the economy one way or another. And but I think it's also in line with especially Europe and Germany. PMIs around the world went really, really soft over the last week or so, and that also gave the copper and basically every other metal going around a reason to sell off. You can see we picked at 4.62 a pound, and we're now around 4.11. So. And massive stockpiles building in the LME. I mean, I think that's partly because China's selling off theirs. but massive stockpiles there. So yeah, and surprise. I mean, considering all that, the XJO has held up pretty well, I think.
Yeah.
Only being around 2.5% off of our highs. So, and
Yeah.
we're up. Where are we? We're up almost 1% today. So we're getting some of those back.
Not bad.
So yeah, that's
Not
about
bad.
it.
It's healthy. It's a healthy correction. Now, if we go on with if we follow up with last week, because we should have some sort of continuity with these ones. I've got to make sure that I look at the camera and not at the screen, because I understand that it is good footage that you've got going on there, but I'm going to try and do more of my TV host thing and look at the screen. If we just go with the follow up, now we talked about the best time to be able to buy the Magnificent Seven or whatever it is, the big tech. Let's just go with Nasdaq and do this one. I mean, MAGS is the name of the ETF if you just want to own the 7 that's over in the States. But I think it is that's not leveraged. So you can sort of see where that is. So let's look at the Magnificent 7 now. Now let's go Nasdaq, because you're going to be able to pull it back. Show me where you draw the lines on the Nas.
I've got
on a long-term chart. This is for people to buy and hold and never look at it again. This is what we're looking for here. So let's see if we can find Heath. Show us your match.
The red line is, like I said, where I put it for the first test of this pullback around 18,400. So about another 400 points from where we are now. So not too far. If it can't hold that, then the longer term trend line comes in around the 17,600, around that mark. This green trend line that comes all the way back to the start of 2023. So, and that would see the Nasdaq trading below the 200-day consistently since the first time since the start of this trend. So I think that's the absolute worst, and that would be a very healthy, close to 15%, I think, pullback there. And that's where I would be looking to accumulate your Microsoft's, Apple's, Google's sort of.
Can you show me a weekly back 5 years, please?
Weekly back 5 years. All right, you're going to test
just hit the W. Your way of using TradeView is painful.
We go. Oh Jesus! Look at that. Hang on, that's too far. It's too far. I've gone too far.
Are you going back to the 80s? Oh,
there we go. There's 5 years.
Is that 5 years, really?
Yeah, that's 5 years. And luckily, this is a chart I prepared earlier.
Remember those days?
Yeah, it's looking pretty good. Very, very healthy run there. We all know about that. If we're going back to the 5 year on the weekly, 16,000 may be another sort of support. That was on the previous high.
No, I don't think we have to. I don't think we have to do.
No, I think we stick with this trend here.
I think we stick with that green trend line, and we're good to go. Load up. If it drops through it, find more money, mortgage your house again. General advice in nature only. But that's what I like.
A lot will come down to next week. That's when the big guys report. You got Apple, Microsoft, Amazon, all that reporting next week. If they come in and beat the market, I think the market will take a bit of solace from that and start accumulating again and building a base. I don't think we'll see any, big rally, but I think that will give the market confidence to say, okay, I mean, maybe we're overreacting here a little bit. So
two things that have happened to me this week. First off, we had the Pinnacle, the Alpha conference, what's called Chasing Alpha, Creating Alpha, Being Alpha, Alpha Male, Beta Male, whatever. The Alpha conference that was on. One of those guys that was up talking, whose name I keep forgetting. It wasn't Hyperion. It was the other guys that do really good. They've got one of those names. Anyway, they were talking about ASML as being their preferred pick over NVIDIA.
Yep.
And also then yesterday on the podcast, I had a fellow from Alphinity, Trent from Alphinity, who is the overseas macro picker, or just the overseas stock picker. He said as well they've got ASML in there instead of NVIDIA. Did they see it? So mentioned twice. Pay attention if you hear it from two different sources that ASML. Yep. Let's keep an eye on ASML.
Yep.
I don't know.
It is a real key sport here. Hang on, I'll put in a quick horizontal
when it comes to lithography, I now know more about lithography than I did last week. But these everything has to go through them. They've got the monopoly on the lithography space. So every chip layout, design, all the stuff that has to go onto it is all goes through ASML. We talked about it at length in the podcast that I did yesterday for Ensemble. Anyway, There you go.
The chip sector basically grinds to a halt without these guys. They make the machines that make the chips.
Yep.
And the IP and how complicated these machines are. It's not something you can just reverse engineer and replicate. There's only one of these guys making these machines for a reason. But what are they, about 862 at the moment? Support is around the 850. If it drops below that, we're back down towards 775. So there's a little.
That's one. I'll tell you what. That's one that you'd want to hold. Just buy it, hold it, give it to your kids. Don't look at it anymore. That's my pick, that one, because I'm going with this. I'm thinking that the universe has been screaming out to me. Just get a good long chunky position of that anywhere around there, and don't think about it anymore. Anything else, or are we going to go to the footy tips and get out of here?
Quickly, we have to touch on CrowdStrike, don't we?
Yeah,
everyone loves CrowdStrike at the moment, don't they?
So Heath backed the truck up on CrowdStrike on Friday night. Absolutely dusted himself.
Yeah, no. I was actually only a little. I think it was only about a 3 to 5% loss. Anything like that was good.
It was good for 20 minutes, mate. It was good for 20 minutes.
It was. I was in front for one night, and then it was looking pretty dire after that. And that's what stop losses are for, especially if you're trading and you're asleep and everything's happening. So, everyone knows why CrowdStrike has been sold off. We had that major global outage last week on Friday afternoon. And what are we? We're off 25% here, easy. And looking, although we're back to previous highs we saw back in December 23. So we're holding. If we hold here, it may be something to consider, because CrowdStrike do have a very good reputation despite what happened last week. They're said to be the best in class in terms of cybersecurity, and a lot of the major companies and governments around the world use them. So, and at this stage, they're saying this outage will not cost them. It's nothing material. So, it's one to keep on your radar along with ASML. I'm actually, if you're picking ASML, I'm keeping CrowdStrike on my radar for an entry as well, because I really like these guys. So yeah, all right.
I think that's it. Footy tips now. I've got them here ready to go.
Mm-hmm.
Hang on, I had them here ready to go. I'm not doing a footy tip this week. I missed out. Newcastle sucked again. I think I missed out on that one last week. So I'm switching. I've got someone here who sent me Olympic tips.
Olympic tips.
Olympic tips. Basketball, men. Recommended bet. Australia to win Group A. Paying $6.50.
Group A.
Write these down. Beach volleyball, women.
We're not going to beat Canada. There's no way the Australian men's team are going to beat Canada.
Canada are the team to beat in Group A, but the Boomers have one of their best ever Olympic squads and have played very well in the warm-up matches. Okay? Top the group. Turn it up. That's what it's called, gambling, Heath. Back off. Beach volleyball, women. Recommended bet Nuss Cloth at $5. I don't know who they are. The US have won. I think that's the US team. These two dominated at LSU before emerging as elite pros. Great. Find some money put on that. Beach volleyball men. Bermans de Groot at $15. I don't know whether they're Dutch. They're Dutch people.
Yeah, they must be Dutch. Yeah.
Cycling. Women's team sprint. Women's individual sprint. Women's Kieran. Recommended bet. Great Britain, Finnecane, and Finnecane. You know, and I'm going to finish it there. I'm going to say I like the cycling. I love the Kieran. It's one of my favorite events of the cycling.
Fantastic.
Got the guy on the motorbike up front.
Yep.
Kieran, did you know that Kieran is actually, it helped Japan rebuild itself out of the horrors of World War II?
Wow, didn't know that.
Yep, that's why it's so big in Japan. That they did that, and the gambling and the money and the revenue that they raised off the punting on cycling in the velodromes around Japan was significantly aided in the rebuild after what happened in Japan. That's why it's just such a great sport. And it's just like, you know, the motorcycle, they go faster, and then bang, they're on. It's fantastic.
Yep.
Anyway, so that's Great Britain into Finnecane for the women's team sprint, women's individual sprint, and the women's Kieran. That's who's going to get it all. Look, that's your Olympic bets. Heath, show me some footballs.
Fantastic. Yeah, Olympics are on at the perfect time for us Aussies, aren't they? Start mid-afternoon, run through all the night. It's fantastic. My tip came in last week. My multi, what was it? I've forgotten what it was. Hawks into the Lions. Lions got in just.
The Lions got it
just
done.
over the top of Swans.
I think you actually had the Lions. Yeah, I think you had the Lions with the start.
Did I?
Or did you just have them outright?
No, I
Yeah,
think I
either
just
way,
had Lions win.
that game was phenomenal. I was
It
I was
was.
on the edge of my seat, just going.
Great game.
I don't care who wins. I'm just loving this football. I'm loving this atmosphere up in Brisbane. They put on a good show. I want to go and see a Lions game up there.
Yep.
It's just beautiful. Sit in the sun.
And
A couple of 4x goals. They play the music between goals. It's all sing along music. Everyone's happy. It's amazing. It's just
I
good
hope
on
Charlie Cameron kicks a bag so you get to hear Country Road every 5 minutes. It's fantastic. Yeah, the game was almost as good as the Crows game on Friday night. That was a freaking rip snorter. Absolutely loved that game. Beautiful. But anyway, my tip this week is, unfortunately, it's against my Adelaide Crows. I think the Hawks will beat us here at Adelaide Oval Sunday night. 1-39, paying $2.25. The Hawks are on fire. Crows are missing quite a few via injuries, and just not as good as the Hawks, I don't think. So Hawks 1-39, paying about $2.25. That's me.
Okay, mate, that is fantastic work. Okay, so I've got my Olympic tips going on. You've got your football tips
Footy
going on. We've tipped the market. We're talking about where it is we want to buy. I think that we've covered all bases.
Yep, I think we're done.
Thank you very much. You have joined us for the Theory of Thing Investment Podcast, brought to you by Wakey, a Wellnex product. Fantastic. And congratulations to them on the raise and on the dual listing, which is coming up on the main board of the London Stock Exchange. My name is James Whelan, Managing Director of Barclay Pearce Capital's Wealth Management Team, wearing a fez. Thank you very much. I was joined by Heath Moss of HLM Investments. If anyone wants anything to do with anything that we covered here, please send me a note. I'll make sure that it gets to the right place. Thanks a lot, everyone. I'm going to figure out how to hit the end recording button quicker than I did before. Oh, there's a pause button. How about that? Thanks, everyone. Have yourself a great week.
Have a great weekend. See ya.
Yes, I want to hit the